RealAgriculture.com is proud to present coverage of the 20th anniversary of Canada's Outdoor Farm Show in Woodstock, Ontario. Shaun Haney here with RealAgriculture.com. I'm joined right now by Moe Agostino from Farms.com Risk Management. Welcome today, Moe.
You're welcome.
It's a bright sunny day in Woodstock, Ontario, Moe, but let's talk a little bit about some Western Canadian crops a little bit here. Wheat and canola. Early yields sound very, very strong. What is your sort of outlook in the near term here for these two markets?
Bearish. I mean, I've been a big bear since September of last year. We were outright sellers of wheat last September, right through December. We came out with an outright sell recommendation last December. We thought the game was over once we started breaking below $8 Chicago wheat and that $8.50, $9 Minneapolis hard red spring wheat. And we've been lower ever since. Looks like a big crop coming from Western Canada. We had a lot of moisture through June, July, had some heat through August, and it looks like it's producing some big yields. I don't know if that's going to change. I don't think weather's really going to. Maybe frost could do some damage here, obviously in Western Canada, but look, maybe some protein quality issues, but overall looks like a big crop. Stats Canada agrees. It looks like a record today. USDA came out with a 31.2 million metric ton crop for Canada, which is a record in line with Stats Canada's estimates. So overall, that's going to be continuation of the bearish pattern on wheat. In fact, wheat today, after the USDA came out with some higher global numbers on wheat, wheat went to both Chicago, Kansas went to new contract lows. Minneapolis close to that. So I've been saying for a while that wheat prices won't bottom until U.S. corn harvest ends around the end of October, or maybe as far out as November 1st, because it's going to be a late harvested year because of the delayed planting. We never got the post-harvest rally this year. However, there are some glimpses of hope as you go into 2014 on the wheat. You've got ending stocks on both soft red winter Chicago wheat, hard red winter Kansas City wheat. Stocks to use ratios down to that 13-14% respectively, which is equivalent to 07-08. And if anybody remembers the spike in 07-08, we had some extreme prices. I'm not saying we're going back there, but that is something to watch as we move past harvest and we go into 2014. You obviously need some more global production issues as you go into 2014 to have a spike. The funds are record short, or short, not necessarily record, but they're short. So if you can give an excuse to cover that short position, you could get some sort of rally. I'm just afraid that prices move lower before they move higher, and if you do get a rally by year's end, it may not be any better than where it is today. I've been saying sell for a while. There are some quality protein issues around the globe, whether it's Western Canada. Ontario had a lot of fusarium, including some issues with quality and protein down in the States. So that's also supportive long term. But as long as corn is going to $4 and corn is king and the yield is 155 or better, that's going to continue to put pressure on wheat prices.
I'm sure there's more than a few farmers that are looking at the canola and wheat charts right now and saying, I wish I would have sold more early.
No question. I've been saying sell canola for a while. The last rally when we got it up to that 530, we had hanging orders in around 537. We got triggered on that. Never did get back up to that 550 resistance. We then corrected back below 500. We're just slightly above 500 this morning, 505, because of the bean rally. USDA surprising with a lower bean yield, 41.2. Market was looking for 41.1, but ending stocks are getting really tight, probably at minimum or below minimum pipelines, and that's causing the market to ration demand again this morning. Beans are back up about 25, 26, pulling the canola with it. The close is always the most important number to look at. So if you close higher today and you get some fall through tomorrow and the following day, sometimes when you get these USDA reports, it takes a couple days for the market to digest the news. I think it's a sell. I think it's going to be short-lived again, particularly when you look at the corn numbers. Those corn numbers are huge, they're big, they're bearish, and I think corn is king in the United States, and eventually that's going to overwhelm any short-term news you get on the beans from the USDA.
Thanks a lot, Mo. We'll talk to you again soon.
Take care.